Hey there. Happy New Year, everybody. Just wanted to make a little video, just sort of going through some updates I have to my tools here, the time price twist tool and the vibration tool, or the vibration box tool. Um, Basically taking these tools and combining them gives you some information that would be probably helpful for trading. And we've also got some connection to the previous video that I like to make with a couple of charts. So hopefully stick within about an hour and show you a bunch of cool ways that you could put these tools to work, and from there applying a good risk management system and a good understanding of how to trade. And generally, you're still going to need to know those things. That's my disclaimer. This is not a trading instructional trading video. It's to show you how to use geometry and sort of a math based system to bring us uh, predictable cycles, which usually work out. And if they don't, there's sort of alternatives that we can immediately turn to that also usually work out. Okay, so a lot of words for very little said. So let's get on with it. I wanted to move on with looking at Bitcoin from a different perspective because we're moving into a pivotal time. People are sort of wondering if this is going to be a major movement like something we had here, if we're going to see a new high in this year, or something like this. So let's lay down the possibilities for ourselves, lay down the geometry, see what we see, make a make a let's say educated guess, make a plan as to what we might do for our trading, and move on. And that's all we have to really think about. We don't have to be too um, stuck and wondering what we need to be doing with you know a million different charts or a million different instruments. If you want to be trading Bitcoin, make a couple rules for yourself, set those rules in stone as why you might be in on a certain move and why you might be out. And you know, and these tools basically help you do that. So we've got here the time price twist tool. What I'm going to do, I'm going to go back a little bit just to show you in the past how this might have worked out. Um, Basically going to be taking information like this high here and this low here and expressing that forward. But let's take a look in the past and see what we would have gotten from information from the past, because Bitcoin is one of those really um, focused on uh, cyclically. Basically, people really pay attention to the Bitcoin cycles, these 4-year cycles that it kind of seems to go to because of the halving cycle. Um, so it's very, people are hyper focused on the cycles. And I'm going to try to show you maybe why these things are the way they are, why things happen the way they do. Now, this is sort of all just analysis. This is not about predicting the future. This is just about measuring the market and seeing what's happened and maybe making some assumptions as to what's happening now. So previously we had a low here. This is the Bitcoin index. Now there's lots of stuff that happened in here if you were a Bitcoin person or if you had some information, if you were trading Bitcoin at the time. Um, at this point in time, I had some miners going. I was trading a little bit. I was never really um, too deep into any of that, but it was very interesting to be a part of at this time because especially during the Mt. Gox crash, which happened sometime in here in 2014, technically you might have some markets that went down much lower here, and this index doesn't really show that. It's sort of trying to average it out for us. So where that real 2015 or 2016 low came in, um, well, where that lowest low came in, this geometry is going to differ, But using the index is something that we can do. It kind of gives us some sort of average look, and I think that low in 2015 is the lowest low. Sorry, just keeping my throat nice and moist here for us so that we can actually understand what I'm saying. Got a little bit of a rasp. Sorry. So here we go. From the high here in November 2013, we had a low here in 2015, harsh bear market. Now, what we did with the time price twist tool is I just took the first pivot point is or the first coordinate is this high, and then the second one is this low, because the tool asks you to place 2 points down, and you know you could just lay them down and then enter in things manually, or just drag the things to the more precise points, or you could try to get it right the first time. It doesn't make a difference. The tool is just sort of a primitive GAN box, um, that then you can take and explore different geometries within it. But this 2015 low here, I mean, I can't even tell honestly if it was, okay, we've got a lower low here. Oh, that's the 2015 low. There we go. All right. Now we've looked in closely and we can see that that's the August 2015 low. And the settings within our time price twist tool will help us sort of use, this information here and see how it would have helped us in 2017. So if I express the geometry above the 0 degree line, and basically it's putting that low as the start of our new cycle, and basically from there putting down some price cycles that we can then extend, multiply, or divide. And we could also place down now time cycles, and that's the sort of the new setting that's within my time price twist tool. I've got here show harmonic prices. That was already available. And then we can show harmonic times. And, this is one way to do it. You could also take a low to a high, or a high to a low. These are all valid ways to do it. Um, GAN would tell you to take it from nearly every angle that you could, in a sense, from every high, every low, every cycle that might happen, every anniversary date, and really see how things are coming together, where all the geometries are sort of colliding. So we might lay down a couple of these if we got this information and we took that and expressed it forward, and we can also extend these lines. It will help us see it a little bit up here, see how it really showed us some really good information here. So what did we get? We got here a good breakout date right here, the 382. There's other information that you could obviously add, different divisions. You could have your standards, Fibonacci divisions, or your GAN divisions. It's truly up to you. You could lay multiples of these boxes down just by copying and pasting them. And now I've got 2, and I could lay some different numbers, like say 666 instead of 618, and 333 instead of 382, and maybe I can do a 0.25 and a 0.75, and I can make these ones dashed just a little darker, just to see the difference. Oops, I just deleted all that I just did. Okay. Punch it in again. Whatever divisions that you use generally. You can see that those basically were major pivot points, those standard divisions. 333, maybe a more major low at the 333 than the 382. 0.5, a major pivot point, and 618, another major pivot point. And they also had some price numbers, harmonics to sort of associate to those times. So you've got this 618 here in time, and price sort of hitting a 618, 2.618 here. Now, beyond this point, we might have to extend this geometry. Basically, you've got what's going on here. Since we've basically set this to a 1-to-1 ratio, right? We can place our fan in here. Whoops. And we know that if I set it from the low here, whoops, to the 1-by-1 there, Okay, that's weird. It disappeared. Okay, if I take that fan, set it from there to there, we know that that is one single box. How do I know that? Well, because the box is set to show the full, if I don't show the harmonic times and harmonic prices, the single box that it shows is this one here. Okay, and that's this time and this price being flipped and multiplied, um, and basically showing you an exact one by one. You could see that the price was moving around basically a 1 by 2 or between a 1 by 2 and a 1 by 4 price line. So what does that mean? It means that on average, the price is moving sort of double the speed of what this geometry was sort of expressing. So what we could do is take these boxes and also extend them outwards. And whenever we see the price break a geometric angle, we can throw up uh, the price ratio higher as well. So if we're up above the 4 by 1, we can see what the 4 by 1 price ratio looks like. Put all of our information back. We get some really good information here for ourselves. More more price levels that were really important throughout the year. Um, all kinds of information. Could add the rest of the fan and see when it breaks above the 1 by 8. Maybe we have to go up to the next level of geometry, which would be from here, about a 10 by 1, right? If we're above the 1 by 8. And once the price starts to really break out, well, important levels multiplied now this time by 10, but still a sort of 1 to 1 ratio, or 1 to 10 ratio. This 2.618 becomes an important price. And of course, I could also put a 2.666, multiply that out by 10, a little bit higher there. Maybe you have a 2.75. And you start to create a couple of limits to where you see the price breaking out towards, and if it breaks those levels, you can trade above them, and if it breaks down below them, you could be shorting below them, that kind of thing. It's a risk management tool. By taking previous geometry and expressing it forward, it kind of gives us this possible story that the market might go through. And if it does go through at all, then you've got the exact map that will happen. If not, then you've got a sort of possible map, an average map. And beyond that point, your trading is always going to be dependent on if the price is above or below angles, it's strong or it's weak. If it's above or below a horizontal level, it's strong or it's weak. Sorry, let me take another sip of my coffee. All right. So this information was pretty good. We could have also taken, let's simplify it, just drop one of the boxes. We could have also taken this one here. Let's just get rid of the fan just for now as well. I'll copy and paste it. Guess I've already got one copy and pasted. It's called the alternate settings though, so we'll just use the default settings for now. Copy and paste that original box. I'll close it off, keep that other information there. And what I'm going to do, I'm just going to put it into log so I could really see the highs and lows very clearly. This is a price time tool. It doesn't have any curves involved or any angles, so technically you could use it in log mode. There's no harm. The ratios are going to be based on price, not on on your log percentages, but still, valid information to see in log form. It's just fine. So you could have taken from, say, if we had a high here in 2013 and the high at the end of 2013 there, you could have taken, instead of from the high to the low, you could have taken from the low to the high. Here we have a low here actually right after the sort of spike there in the spring of 2013. Sure, a time when everybody, many of you probably heard of Bitcoin for the first time. Something happened there. Okay. So sort of a different look at the same information, some different turn dates, some different kinds of levels to work with while we're trying to trade through this trend. And you could have had a different angle set from the high instead of the low. And then in the future, when this stuff here is playing out, in this case, we're still looking at that 10/1 ratio. Well, look at how that angle really becomes an important look at what is strong and what is weak. When this is hitting this angle here and it falls below, it looks weak, but once it breaks back above, people start getting long, and it hits the next angle up, falls back down. Once it comes to this angle back again, falls back down, retests that 1/1 level, that crossed level there. Again, a sort of a story that the geometry of this previous move is sort of telling us a lot about what happened here, at the 618 here being a great time to buy long term. Okay. And of course, we've got information that we could express much further. We've got a great turn date there, which predicted the 1618 here, predicting a great low here in 2019. So still playing out beyond there, but we've also got this low here, we've got this high here, we've got this high here, this low here, just the same way. We could say, if you'd like, set different colors so you could see them all at once, or you can just you sort of keep muting them out and see the different ones and sort of make notes as to what you might need from different ones, or combine them by making some notes and then eliminating all of the geometry and only looking at the sort of scribbles that you make about what level is a good support level, or when the market's above this angle it's going to be strong, when the market's below this angle it's going to be weak, that kind of idea. You can make that distinction and then eliminate all of this information here that you don't really want to see if you want a cleaner chart. Okay, so that's some good information for us. So let's do it on this current market here. Okay, let's take, oops, time price twist. We're going to go from, let's do the low to the high first. So let's do the 2015, or yeah, the 2015 low to the 2017 high. So we would have needed this high to actually come in and, actually resolve as a high before we could really use it for such a big pivot point. But once it's set in and we have all this sort of, information already, and we want to see what's in the future, we can, look back and know that that was a major pivot point and we'll use it. So I'm going to take, what it's telling me here is that I can't project 500 bars into the future. So what's going on with this? This is taking a range here of bars. Well, that range of bars is right here. It's 852 bars, and the price range that it's sort of traveling from the low to the high here is 19,600 and change. And what this time price twist tool, right? Think about it. So what we've got here is something that's going to take the time and turn it into price, and take the price and turn it into time. And if I've got a box here telling me that 500 bars in the future is being, the tool is trying to lay something 500 bars in the future, and TradingView doesn't allow that. Well, that means that it's trying to put like the first bar of the first box way out here somewhere, and that's sort of nonsense information. We don't need that. We want to knock it back a little, and what that's really doing is it's trying to place a bar 1960 or 19,600 change bars in the future. And it's trying to set a box of $852 tall. So it's taking that time and price and flipping them and then setting a box sideways. Okay. And so if I take my settings and my price ratio needs to be shrunk in a sense, it needs to be a division rather than a multiplication because we've got this number here. And instead of 19,642 bars, we want to see something like 1,964 bars. So we'll go down 0.1. Okay. And that should, oh, that's our price ratio. Price ratio needs to be multiplied. So we can go to 100 on there. And we can go to time ratio 0.1. Okay, so the time ratio you can see here, 19,600 bars. Let's go back to non-log. You can see that that price is only going downwards. Let's get it upwards as well, above. Okay, and let's see here. Maybe price needs to be just by 10. Yep. So 852 times. We don't want something $85,000 tall though. Let's see, 85,200 should bring us just up here. Yeah. Okay. So from 20,000 to about 100,000. And then basically taking our fan, we can set it and see, is the market really moving at that 1 by 1 speed or 1 to 1 speed, 1 to 100 or 0.1 to 100, I think it is. Set that fan at the 1 to 1 and we can see the market's, sitting below the 1 by 1 angle and sitting basically above the 2 by 1 angle. So instead of 100, maybe 50, right? Makes more sense. And then we can see the harmonic prices, the harmonic times, extend the lines. And we can see that from this low, right, and this high extended forward on April 14th, 2021, we had basically a perfect time and price square out in a sense that it hit the level of the top of the box, the first box, and which is now we know that's the 50% level set to the 1 by 2, the 0.5 or the 50% level. I guess it's the $50 per day here. Okay, because it's a daily chart. Okay, so projecting that forward, we got some pretty good levels. We had this 382 basically holding the market all through this the bear market, and this entire this entire structure is still keeping within um, this box that was created and just kind of heading towards an important time now. And some other things that you can do are, laying some other fans down. Lay, or you can simplify and not use fans, but just use trend lines. So instead of doing that, maybe we'll just lay some trend lines. You know, try to be precise. I'm just trying to lay it down here quickly for you. You can see that this is, remember, this is set to that $50 per daily bar here. You can see that that sort of held the low, sort of a repetition of the 1 by 1 from above. This point in time here is really what the focus is in the future. It's either that we had a price that moved from this point in time, 100% of the range that it's expressing, which would have been the $100 per degree, or is it going 50% of that range, or is it really just going to rematch that level, or is it going to fall 50% from that level to some lower level down here? Maybe not 50%, but you know. So from these levels, you've got basically, I mean, if you're a risk management person, you should be knowing, like, as soon as you see this level broken, we should be having our stops in some here, some range in here. It all depends on um, your needs, your trading needs. So I can't really go over where I would put my stops. I mean, I can tell you exactly where I would put my stops. I'd probably be looking at this if I was truly looking at this from a long range perspective. The idea here, even if I don't make any other analysis, if I don't do anything else, if I know nothing about Bitcoin, if I know nothing about this market, if I literally am just making a guess as to what might occur into the future, if I didn't have other, means to understand what might be going on, if I didn't have the vibe box, if I didn't have, um, um, all the different tools that I might use, well, I can still trade off this chart because I can just say, well, as long as the price is breaking upwards, we could be buying, and along the way we could be taking profits off the table and readjusting our risk constantly so that we are never overexposing ourselves into this market. It's truly a purely a risk management situation. So if I was above this one by one, these diagonals that are, you can say they're arbitrary. I mean, they might hold the price sometimes. It's interesting how they do, but you can also say if they are just arbitrary, if I just drew a line in the sand and said, well, when it's on this side, I'm doing one thing, and when it's on this side, I'm doing the other thing, that's, in a sense, good enough information for us. So I could look at this like it's an important point in time here. That's the full 1964 bars. You can see that this 750 bars was important. You can see 980 bars was sort of stuck there at an important time. And well, we already know that 1214 bars was important, right? Portions of 1964. So let's say we had a bull trend that might be setting in within here around May 5th, May 6th. If it's sort of bottoming out already, let's say it kind of ends up around here, or maybe it goes straight up there, whatever it might be. If we were long along the bottom here, along the low angle here, a simple 4-to-1 setup looks like this. The first harmonic, or 50% maybe, 50%, 618 would be, a bullish kind of target. But we could be managing this position all the way through, even if we did sort of aim for, say, the 50% target. From our lows here, even if we waited until we got above the horizontal level, right? A simple 4-to-1 setup looks like this. It's quite wide. You're going to get a lot of room with your stops, right? You could probably even be a little less safe, but 4-to-1's a pretty decent position to take, in my opinion. It's going to keep you in with some wide sort of ranges. It's going to allow you to stay in on the market if it does start to fall back down. You could be exact with your levels, or you could be casual with your levels. You can say when you think it might get there, well, we've got some other times that we could look at in the future that might occur, right? Some crossings of these levels here. You can see that this is crossing here. So when this crosses here, it's sort of like the 1.382, right? 1.5, 1.618. So you know that these times in the future are going to be important. That's years in the future. So if you're going to look for a change, maybe somewhere around here, okay, 2024, some sort of end of this uptrend that might occur, if it did occur, this is a 4-to-1 setup for yourself, and you'd be out safely. Um, and then how you manage that position is really going to be up to you. How much money you put into this stop is really up to you. How much time you really want to hold this position. This is a long range chart. I'm taking an entire range of an entire bull run and expressing it forward. Well, that means that I need to be sort of looking at this from a long term perspective. If I want to be in on a shorter term trade, I shouldn't be looking at this chart. I should be in on closer and expressing different geometries from smaller ranges, seeing what it looks like from this high to this low and this high to this low, and seeing what that sort of expresses for us. Okay. But that's a really simple trade. You don't have to think too much about it. The problem is people will put too much money down on there, and they'll put it all down and think, it's going there forever. It's I'm gonna make millions of dollars. Like that's just a silly way to look at it. It's just a trade. You're putting in here what you can afford. It's a business decision. It's a business expense. This amount that you might lose is valid, and you're aiming for making 4 times that amount. Whatever that position needs to be, the position size is going to be how you're going to determine or how you're going to control how big your stop is, right? How much money you might lose in this 4-to-1 setup. Well, that doesn't mean that it's, in this case, 26% of all your money. That would be crazy. We need to start to think about these things like, okay, 26% of this position, which is basically setting it up so that this is a set number for ourselves. Is it 1,000? Is it 100? Is it 10? Is it 10,000? Is it 20,000? Is it a million? That's really, that's going to be up to you. But that could be a set number within there, and we're looking at 4 times that amount. We're not looking to lay it all down. We're looking to manage risk. Okay? So that's a great way to look at this. Just the same way, we could set up a short position, maybe below these angles. If we get weak, get below this angle over here, can set up a 4-to-1. Maybe we want to retest that 382. Maybe there's some other levels within here which you might, that's a quite drastic drop. So maybe we want to see what this looked like if we take this and we get rid of the below section. We copy and paste it. Add the below alone, remove the above. And now I'm going to take that and set it to $10 per degree. And now we're seeing that tinier range that used to, exist within this geometry. That when the market was moving this slow and didn't really move at this speed above here, when it was moving at these speeds, but there was some more detail that we could have seen. A tighter fan, so that when we really jumped into this geometry, we would see more details worked out, right? Different highs and lows being sort of pegged, and broken breakouts being, basically determined by levels here. Obviously, that's just the previous all-time high, but these levels along the way playing a good role here, right? Now, if we had this here, it's just the same way if we were below the 1-by-1 here, and then we were getting weak, let's say we were below here, we could be taking a number like this 11,000 and setting a 4-to-1 here. It's going to be a little tighter. Oop. Close enough. 4.1. Okay, something like that. So if we broke below here, you'd be shorting below 16.5 and you'd be longing above it, or above the horizontal angle as time passes, or the the diagonal angle as time passes in the horizontal line. So, I obviously there would be a million other ways to look at this along with other information. So if the RSI or whatever other indicator you might use, volume, it's going to tell you some other information about the market, right? We don't need to just look at this like, okay, it's time to go long. This is all combined with other things, right? So if we take this information and we combine the, say, the vibration box with it, the other updated tool, we could see what is this telling us? What are the possibilities that the circular geometry that Gann used is telling us, right? So let's take this here, this high, and we know that it's below that. We had that fan there, and it told us that it was below the 1-by-1, which is up there. So it was set to the 1-by-2 at $50 per degree, right? Now, once it starts falling down and breaking down, you could be lowering down that geometry as well. But I'm just trying to reduce the amount of things on the screen at once here. We don't really need to see the Gann fan. We could just see the angles, right? So we know that that's really the 1/2 moving at a $50 per day uh, ratio. And of course, you can be exact about it. You can dig right in. Now, if I looked at this, like the single box that was expressed by this range here, then I could take my vibration box. Let's see, vibration box, which is now updated basically to just be a little quicker, to have more divisions allowed, and to allow for an opposition, a midpoint division to the vibration as well. It's a pretty handy little update. So if I place it down here, now what I'm doing, I'm placing it to the high here in 2017. And of course, I could just punch in the date and time, or I can just drag it over. The problem is once you start playing with lots of these tools, TradingView can slow down on you. Okay. Now for Bitcoin, I like to use the division of 7. We've already talked about that. 283 is, whoops, 283 is its vibration natal sun. And you've got vibration on. Now we've got this vibration opposition. That's a midpoint that it adds. It's a secondary line, a midpoint between the two division channels that it usually did make before. So that's sort of just some great extra information for your trading purposes and your cycle information. So what we want to do now, since it's set right within the price ranges, we've got to set that future date properly. Unfortunately, with the Vibe box, I still can't get it to, allow you to just drag and drop the point into the future, the coordinate into the future. Um, it's sort of a limitation of TradingView. I can only place it on the last bar. Okay. But then you could just manually enter this date here. So that is May 4th, 2023. Let's push that in here, May 4th. Whoops. And it's set to that bar there, you can see. Okay. And you can see that's the information that the Vibe box gave us for this, from this information that we got here. Okay. So if I duplicate this up and down, let's get rid of that small box below. Okay. Quite powerful information, I think, right? I showed you last time the vibration of using the birth date and using the sun's path. Well, this is using offset geometry to the price action. Gann would use both of those because we're using static and dynamic cycles to try to figure out where's this price going. What would it look like from zero? What would it look like from our last high, our last low? What does it look like when we use standard calendar dates? What does it look like when we use different kinds of astronomical dates? These things are all just possibilities. We take a look at them, we see what it's been following in the past, and we make an assumption about what it might do in the future. And if I just take this here and I dim out those lines, even though those vertical lines are rather important timing dates, this is taking our already divided box and dividing it further, right? So you can see that between here at the 618 and here, which was one of the divisions of 7, you had quite a drastic move. And so that's what you're going to be looking for. You're looking for these kinds of important times when the cycle information comes together along with the standard cycle information, along with the vibration that's moving in the direction. Well, you can see that this up channel and this down channel, not only were they important for timing purposes, but they were also important for the actual prices that were hit. Now, it didn't hit this exact price and move down, but you can see that once it started to hit this price here, and once it started to fall below it, that's when it became very weak. So again, that idea that if it was above this level here, we have this possible target up here, and if it's breaking below, well, targets that are down below, either these ones here or the division of 7 of the vertical. Okay, and down here we can see that it's still calling for some sort of uptrend. You can see that the uptrend is unclear. It's not like a perfect prediction. We had this strange sort of price action here. Well, why? Because it was really out of sync with price. The price is calling for a high here if it was moving upwards, and the cycle is calling for a low. Well, this is the price of the low, not up here. It does hit a harmonic price. You can see one line up here. Maybe if I make that a little darker or a little lighter, so you can see it, right? There's the price there. It does hit a harmonic price. But why not move up there, or why not go down here? It's much more just about if the price is below one of these lines, we could be shorting towards a target like this level. Did it get there? Not all the way, got rather close. Based on these horizontal levels, it hit the other horizontal levels that were there and sort of very predictable. And moving now upward with the cycle, when did it change? On this last division of 7. And again, this is just the vibe box set within the time price twist tool, 2 free tools that I released for you, and that's the kind of information you can get from it. So I think that's like pretty powerful, honestly. Um, you can then take your vibe box, cut and paste it, whoops, set an alternate vibration. Uh, don't show the box twice. It'll help drop quicker. And you can just sort of measure what was the first harmonic there in time. Right? You've seen me do this before with the vibe box. About 137 days based on just this, it's a very individual measurement. It has to be, it's very individual to this movement measuring from the 2015 low to the 2017 high. Okay. So I've got my secondary box there, 137 days, even if it was not exact. If you want to be exact, you can make sure you're really exact there. You can see the alternate channel that it creates. The harmonic channel is sort of an alternate that works really well with what's going on. If it doesn't hit the low here, it might hit the low there. That alternate pushed forward, sort of one harmonic forward, right? So it's sort of giving you a channel of possibilities rather than just a single line that the price is kind of moving around. We've seen information like this. I've shown you this box using my price time cycle tool. I've shown you now the price time twist tool or time price twist tool. The vibe box just setting it within standard cycles like the solar cycle or the birthday cycle. So you can use this on any market, right? And a lot of people ask me about things like, sector information. How do you go about choosing what you'd like to trade and what sectors you want to trade? And do you only trade Bitcoin? Do you only trade, the ES? No, the answer is no. As a matter of fact, I often do trade Bitcoin, but as far as stocks go, I would rather not trade the S&P 500. I mean, in the sense that I might trade it as a CFD as the S&P 500 or whatever they call it on these FX sites. Um, uh, and not trade the futures market at all and be much more in control of my leverage and my positioning and my ability to be flexible with the way that I can trade. I'd rather be trading the stock directly. I'd rather be using spot buys. I'd rather be much safer and much more methodical with my trading than just, laying it all down at 100x. It just doesn't make sense to me to do that. But hey, I understand that if that's sort of where you're at and you have a good system that works for you, well, these charts work the same for you as well. Okay, so if you're high risk, you can do that. I'm a little slower, old school. I like to be a little more safe, but doesn't mean that this information isn't going to work for somebody who's looking for um, you know that high frequency kind of trading. You can get down onto a 1 minute and do the same kind of information, get the same kind of information from a 1 minute chart. So what I want to do though, I want to look at the sectors and how I might analyze those sectors a little bit with this tool. I might go back and look at the sectors through the lens of their birth dates because just like we did on the last video, we get some really good information. And then you could also sort of do this kind of stuff um, on your own with the sectors using some ETF information. So you can sort of measure the sector performance against each other and see where their individual cycles are at, and see if that will help you choose stocks that you are interested in, and then you can do a sort of wider analysis using these same kinds of tools and getting a sort of not just price time information for trading purposes, but also for general analysis of the market, for looking at how the global world, the global markets are being affected. Different angles here. Sorry, just playing around just to show you there's lots of information there to find. So let's pull up a new layout. And let's do something like, well, XL, let's see, XLE is energy, XLF is financial, XLK is technology. Those are important things to look at. So, all of these different um, ETFs, you can look at them to sort of get a good general look at the market. And each one has its own price information. So each one, if you're using the time price twist tool or the price time cycles tool, um, you're always going to get individualized information regarding these markets. But some of these markets also have a birth date that is the same. They all started their contracts or their trading dates on the same date. So using the birth date technique, you might find that there is some cycles that look exactly the same, or they sort of work the same, but still the price levels that they're within. And so even though if they have the same vibration, they might have a different division. They might have a different price range that the price sits within. So that's still valid to look at each one individually, put down the price levels, put down um, you know the birthday information like I showed you last time, and it's really helpful. So let's take a look at something like XLK. Um, yeah, so XLK here. Let's see here. Actually, let's do the XLF XLE. Yeah, okay. XL. Oops. What's going on here? There we go. Okay. XLF financials. It's a good one to look at because bull markets, if they're going to run, financials need to sort of run with it, right? Banks and people who are handling money need to be doing well as well. Okay. So if that's just our general rule, then we're going to want to see cycles moving upwards here, right? So we could do a price time twist tool using these highs and lows here, express it forward just like we did with Bitcoin, or we could set it within the birth date. So let me just let me see here. So I'm just on the other screen here. I'm going to pull up website that just gives me some dates. That helps us. So I just pull up like ETF.com and I search XLF. And I take a look back here at the information that it gives us. I can see that inception date, first date of funds operation 12/16/98. So that's December 16th, 1998. Okay. So I know that the sun is setting at 264 degrees or so on December 16th. So that's off the top of my head. I know that. You can look it up however way you need to. You can get a map of what, where the sun is on what date. It's starts at 0 degrees on March 31st and ends 360 degrees back at March 21st, and it's back at March 21st the next year. Sometimes it's a little off of March 21st. It's just the first day of spring. So the inception date of XLF being 12/16/1998. It gives us a number of 264 degrees. We could use that for our vibe box. So I'm going to take my vibration box, set it in here, set it on some two random numbers just so that I can lay it down. And what do I want to do with this? Now I'm going to set it from 0 to $36, because that's a full one-to-one sort of 360 degrees, right? At 10 cents per degree. And I'm going to turn on my degree of origin to 264, because that's where the sun was on the date of the first contract here, or the first trade date, sorry. And um, I want to set this then within the year that we're working, or the 2 years that we're working, because I could duplicate it to the right so we can get another year set. I want to set it within its birth date. So 2020, 12, 16, and 2021, 12, 16. This is the yearly cycle. I'll link the previous video so that you could take a look at this technique in detail from the previous video. Okay. So we had a 2-year move there recently. Let's take this here, and if I take the vibe box and I take the border, set it to solid, and move it here, that sort of shows you the divisions a little better. That's the full 2 boxes. And what I'm going to do, actually, I'm going to take this box, I'm going to set it from 18 to 36, and then I'm going to duplicate it up and to the right as well. Sort of squeezing it in a little closer, getting a little more information. So it's a 1x2 box now, moving 180 degrees, or squeezing basically a 360 degrees into $18, right? 0.5, or sorry, 0.05, 5 cents per degree. Okay. So obviously this is an important price level, right? This $36, you can tell. $360 important on any market. And if you really wanted more information, you might have to zoom in even more, possibly get it even closer, right? So you could cut that in half and go to $9. That works too. Or you could sort of use some different numbers, like different types of combinations of 2 cents per degree, 4 cents per degree, 5 cents per degree, right? So if I did $9, well, that would be sort of a $2.5 per degree, I believe. Oh, sorry, 2.5 cents per degree. Anyway, doing the math like this off the top of our heads, gets a little chaotic, so I'll just be more exact here. So obviously this would be 27 to get a little tighter. Okay. Now, what number should I be using for divisions? Well, the word financials is what I would be looking towards. So 1, 2, 3, 4, 5, 6, 7, 8, 9. The word financial, 9 letters. 1, 2, 3, 4, 5, 6, 7, 8, 9. Try that one out. Let's dim those divisions back a little bit. See how they worked for us. Some great turn dates. Absolute high there coming in just after the end of the box, the first harmonic. And if we take our vibration, we could lay it down, right? This is our vibration for the year, basically set a full solar cycle from the birth date, okay? And then we've got the opposition, so the midpoint that can also be shown now. Okay, that was the point. I did show you how to make this point in the previous video. Now the tool does it for you for free. And if I duplicate downwards and to the right, I'm also going to get some good information there for this current stuff here. And so obviously the tips of those cycles are very important. You know, seeing the price actually tap each tip there. But if we're seeing an opposite action, we're seeing highs come in where lows are expressed by the cycles, and highs coming in where the lows are expressed, or lows where the highs are expressed. We could just show the mirror, and that might be the way that it's working. Okay, especially in a downtrend, the market starts to move with the mirror quite closely, and this is the birthday cycle, right? So it's the yearly cycle, gives you the year of trading. Okay, let's do that same offset. Shift it over to the first harmonic. 23 days this time. See what all that information looks like. Maybe it's a little too much to see 2 years all at once. But once these cycles started flowing here with these cycles, right, with this reversed cycle, right, the mirrored vibration, really started to tick well since this point here. We had some sort of changes and flips within the cycle here, but then it started connecting again and really started moving. And the channels that it creates really define the price action. Okay, you could look at them one at a time if they look a little too chaotic. You can put a fan down through this price action as well. It will give you important dates. You could put a trend line here through here. Okay, so the first date, the first vibration, if we were to take this and just flip it back for the time being, because at some points the market was definitely ticking with this action in here, especially with the flipped over cycle. Okay, this date right here, which is the first 264 degrees of this cycle, right? So although the price is set, within those Gann levels, and the date is set to the birth date, December 16th, 264 degrees within this cycle gives us the date here of each year, September 9th being a sort of important time. We can see a major correction there and then a break upwards. Okay, so it was an important time in 2021. Let's take that September 9th date in 2022. September 9th. Usually an important thing to see. That alternate sort of trend 264 degrees into our certain trend. And you can see that the price and time squared out there, and then a major fall. So 2 major falls dictated by September 9th. Could be more exact here. There you go, almost exact. So that's the offset cycle, and you can see both of them. If you can handle all that detail, maybe it's about zooming in and seeing it. We know that currently it was moving with the mirrored vibration quite well, and now it's kind of veered off of that, but that could just be the next cycle setting in. So let's just set these exact same boxes forward, because we could just set them 2023, 2025, or 2024, sorry, which will give us 2 full years. 2024, 12, 16. And that should give us boxes. Oh, maybe not. Oh, yeah. What am I doing? Sorry. 2022 to 2023. There we go. 2022, 2023. Okay. There we go. 2022 to 2023. All right. This will give us dates in the future and price lines in the future. Possibilities, not exact ones. You know that because you could look back and see that it did flow with these cycles. It hit very clear targets within them. It moved with lows and highs coming in at appropriate times. Oops. But you know, the exactness of the cycle isn't hard to determine from the future. We just know that we've got these cycles into the future. We've got these dates in the future. We've got one coming up here. We've got a hard level here of $36 that it needs to break above to continue its bullish cycle. And where would that high come in? Well, maybe a high coming in sometime in April or May makes sense. If it did get a high here in February, sometime in February, and a low sometime in March, well, then we could get a high here sometime in April and a reattempt at the previous all-time highs. That would be great for the bull run, for the financials to continue to do that. But if this were to fall down to here and sort of reconnect with these lower level vibrations, so be it. We have the horizontal levels. We don't bet above until we see confirmation. So why would we be in on a long on financials if this is not moving above its $36 level, right? Although the cycle is telling us there's a possibility, there is always an opposite cycle. So there could be a downward cycle here setting in that we need to take a look at. We could see that instead it could move down here. And then the possibilities start to expand. We can see movements into these lower levels here. And this would be very sort of detrimental for, any bull run that's going on right now. It's pretty fragile. And financials falling down without them, bull runs don't happen. Okay. So what's the alternate? If financials and therefore technology are turning over and they're going to find a high here, that's just a possibility. Again, we could be looking at it the other way and trading above. If we did get that break above sit 36, well, there's a better reason to be long in something like banks, right? Something like financials, because you'd be looking at strong money money-based businesses, and then that means that technology and things like that can be invested in, and they can expand as well. So there would be a reason to be in on your regular old stocks, your tech stocks, or your risk-based stocks, and possibly things like crypto if financials were running, right? But what's the alternative? Let's say something like energy, right? Something like a commodity in a sense, um, is a good thing to look at. So XLE is the alternate other ETF that we could look at that just sort of contrasts financials, and when they're moving opposite of each other, and we can see maybe one is diverging in cycles from the other, we can see how they're working together, and if we can make a distinction as to which sector we should be in and what levels of the ETF should be in validation levels for us to be in either sector. So if 36, we should be in on anything that benefits from financials. Uh, Anything above 36, we should be in on anything that's benefited from financials being bullish. And if we're in on, XLE, well, we find the level, whatever that level might be, we want to be in on it if it's above, and if it's below, we might want to be looking at something like what relates to financials, that alternate kind of market. So if we take this, I'll use these same tools that I have set up, but I'll set it into the other ETF, XLE. So energy, right? That is 1, 2, 3, 4, 5, 6 letters, and sitting in a different price range completely. So let's just take this first box, set it up in the price range that we're in. We're up here in the 70s. Let's go 72 to, or, oh yeah, here, 36 to 72. That's a good level, right? Should it break and mirror upwards as well? There we go. Okay, so we've got a box above going from 72, right? 108 there. And now we have to individualize the box to the market that we're in. We're in the price range, that's right, but we want to set it to 6 because this is an energy sector. It's going to be moving differently. And we might want to take something like that ETF website again and see if this has a different birth date. XLE. All right. 12/16/1998. So I told you a lot of these might have the same birth date, but you already know that first of all we're in a different price range and we're in using a different division. So 264 is going to look completely different, but we could still use 264. Okay, and I think that you could already see there's some sort of connection going on here, but this is in an uptrend. We really haven't seen much of a correction here, right? This has been in an uptrend for the last 2 years, and starting 12/16, right? We've had a low here, a high here, a low here, a flip in between here, but then we're back to here, a low here, a high here, some form of low set in near here, but we got more of a high and some sort of confusion in the same channel here, a turn date there. But to see the alternate cycle would be to see the offset cycle as well. There might have been some extra information to see by offsetting it by 25 days. That channel information that we get, right? Gives you a little more information why we might have seen this downtrend in here. And anywhere we see the flip occur, we know that it just happened in the opposite direction. So it could be that it's just that we had a little bit of a mirroring going on. You can see that the high coming in there, very much defined by that. This downtrend kind of being defined by this swooping down here of the vibration, and this uptrend very much defined in here instead by this opposite. So really powerful information always, right? And then, using our trend line, setting it in again, we get that alternate date within the year. Well, where is that date? If we're not seeing the mirroring, we'll be able to get the first vibration. 264 degrees, we know where it sits in the box. It's right here in price and in time right there, where the trend line hits that division point. So we can see that although, throughout the year, all those other dates are important, this date of September 9th, again, right, because it's the same start date, but also the division happens to also fall, like, basically around the same time here, based on 9 divisions or 6 divisions. That has to do with the fact that, obviously 6 and 9 are, have threes involved in their divisions. So, obviously this time here we had a major bull run occurring around this time, and then this major breakdown here. An important time to see if the cycles are going to flip, an important time to see if we're going to get a major change, an alternate date other than, the obvious connection to the shape of the market through these vibrations. Okay. So how would we look at it? Well, currently, let's take this. We're entering, just because, obviously that December 16th date, it's recent. We have a new cycle basically recently. 2023, 12, 16. 2022, 2023. So the next year's cycles are beginning. Do we get a downtrend here? Okay. So how would we look at that? Looking at them side by side, these are two sort of, let's say, markets that can be uncorrelated sometimes. Market that, in a sense, has been in a downtrend for a year, where this has sort of been in, well, maybe not a full uptrend for the entire year, but definitely in an uptrend for, on average, right? So two markets that aren't correlated. You've got cycles that are working alternately. There's different divisions going on. Although they had a same start date, they have different shapes to the market. And I think that, something like this going on, where you've got this market moving up and down, and then up here breaking out over 36, and we have a major sort of bull market in a lot of the other, risk-based markets, cryptos, um, more technology breaking out further, or finding breakouts from bottoms. That would probably be conducive to that action occurring, and this breaking out to say 38, or even up until testing the 40s level. And here we would be breaking down and hitting maybe one of these harmonics along the way. A major retest of 74 levels would be, around the same time as this hitting a high in here. You can see that the cursor on the left and the right, you can see that around that time we've got a low scheduled here and a high scheduled here. Has this been moving with this vibration? Well, since this low here, it was a little bit off in the sense that the low came just after, but it has really taken this shape. Now, can we look at it the other way and say, well, maybe we're having the mirror occur? We can, and we could plan for it. And we can make sure that we know that once we see something really confirming and happening, if this was really going to run higher and energy costs were really going to keep going and commodities, well, not all commodities are really represented here, but energy does represent some form of our commodity prices. Well, we're looking at major bull run here, right? Much higher prices, and more than likely financials not really doing as well, let's say, during that time, and maybe just sort of not fizzling out, even sideways action or breakdowns here would all be kind of bearish for uh, risk-based markets more than likely. Um, Now, these are just, you know, assumptions based on what's happened in the past and general assumptions about how markets are connected. But also you have these levels, these cycles that are showing you price levels that when they are broken, when markets show you they're not moving with the strong trend upward, well, and they aren't moving with a strong trend downward, well, there are alternate targets within there that they can hit. They can hit the horizontal levels just the same as any other horizontal levels that are important that you use, support and resistance levels. Use them the same. When they're above, we're strong. When we're below, we're weak. If we're continuing up this diagonal, if we're below the diagonal, we're weak. If we're above the diagonal, we're strong. If we're right in the middle of the channel, well, it's also pretty strong. You can see that same kind of stuff occurring. If you look back, set these up over the years and see this thing back from 1998 and see how this vibration played out every year, see how it flipped, see how it worked. And then you can apply that same knowledge that you've learned from looking back previously, how it happened previously. Well, that's going to give you some really great information about what might happen now. And it's only about a might, it's only a maybe, but it's a good possibility based on previous information. And if it doesn't work out, we have the alternate information. We have the mirror, which should give us the alternate information, or the non mirror in this case. So this is going back to the previous video, but using our new opposition, it makes it a lot easier. The tool should go down faster. It actually is less code going on in here, and the divisions you are allowed more. So if you have a higher number of divisions you need, that's great. You can make these boxes manually, so you can do a division of 29 if you needed to, but so be it. I can only get 14 in there because that seems to be the limit of what I can get TradingView to express without overloading. Um, and duplicating this information, pretty simplistic. If you can't draw another box, if it's just failing on you, if you don't know what to do, you want to copy it around and try a bunch of different ways to lay it out. Well, you could do something like copy. Well, obviously you could just copy the boxes with a box tool, and you could also copy the vibrations with the polygon tool. It's sort of a good way to do it. Pretty easy. Once you have it written in stone here, you can copy and paste it all you need to, right? And that way, if you really needed to see it multiple times in different ways, different harmonics, another midpoint, you want to do that, you could do that, um, right? It's all about how much information you need. If you don't want to overload your TradingView with all sorts of scripts, well, you could just sort of lay out the chart and then lay out all what you need, get rid of your scripts, and you've got a pretty good vibration there that's working out. Um, and then maybe, the higher level, if you needed it, would help you. Here, you can do the same thing, draw the box out, draw your lines, and then simplify the view by removing the script afterwards. So you can have things like, this being drawn out for you just for the time being, to sort of giving you a possible movement for the next, say, 6 months, 7 months, and then get rid of that, and then show that to your client or whoever. Right? Looks something like this, and we can hit lows here and highs here. And if this doesn't work out, we have an alternate viewpoint where this goes back up and keeps moving up and hits a high. Okay. So the price time flip tool, price time twist tool, you'd be using it in here too, just the same way. You could use it with the vibration box, without. It's really a matter of playing with the tools and finding the different dates and really working out possibilities and then planning for the possibilities. It's not about absolute prediction. I think people have a little bit of a funny way to look at things sometimes, and when they see me mention the word GAN, they think, okay, well, I must be some, we must be making exact predictions throughout the year with these tools and they must be perfect. Not really about that. Let's try, highs and lows, try multiple highs and lows from the major highs and lows from the next major highs and lows, express it forward, see what it shows you, um, multiply and divide in multiple ways, see how it relates to when volume is moving, fast, or, moving and growing rather than falling. Okay. See how it relates to the way that the market sort of moves through this geometry, because that's often going to be something that is worth looking at. Okay. So there's your price time twist tool being, you know, set to a range of, oops, $66 and 404 bars. Okay. And what we've done here, multiplied the $66 and turned it into 66 bars. And we're taking the $404 bars and setting it into $40.40 box. You can see that this 0.618 held the lows twice. High coming in here at the 1.618, retest of the previous cycle high. And you know that there's different divisions through here. You could punch them in just like we were doing before. Always worth to see the second box if you're looking at the, say, the 618 and 382. I would say that it's often interesting to see the second box here of the, in here. 0.5, 1.5, and 2. There we go. Right. An interesting point in time there. And comparing it to here, comparing it to there, the lows coming in here, the highs coming in here. It's always interesting to compare those moments. And of course, multiplying out those boxes, setting a vibration within them would help you. Looking at volume, setting up these kinds of structures on volume is also possible if you have the will to get very in depth. You can definitely do that. Okay. And when this time goes forward, obviously we could extend this further. We could start multiplying it out further, or we could see what it looked like when we multiply it differently, or we could also just start taking different highs and different lows and start seeing the combination of different dates and times that we get from, squeezing out these different lows and highs, right? Some different turns sort of defined by the same kind of information. Price ratio, we can do, maybe it's gone up 0.5, or maybe that was too much, 0.2. And time ratio, maybe we can go to 2. Yeah, there you go. A little different now, right? Similar structures defined by the previous tool settings, right? And of course, horizontal and also trend lines, right? So if we're above this line, we're strong, we're long. If we're below it, we're weak. And if then we have alternate angles, that if we're above those, we could still be strong, right? Fibonacci fan would give you the 618 or the 382. Right? If it's above the 382 fan line, you can be long. If it's below, we don't really want to be in, or we could be short. Of course, this is the energy sector. We don't necessarily have to trade the ETF. We could be looking at all kinds of different kinds of energy companies and power companies and different ways that energy is being put on the market, It's not. You can look at what the ETF is made out of, the companies that it's kind of invested in, or what's being expressed by the ETF, and see what those markets themselves have the same kind of information being laid out, the same cycles, the same kind of thing, same price action, but actually for your trading. This is for the sort of general market analysis. It gives you a really good big picture. So that's a pretty good in-depth video here. We've got some look at the two major ETFs here for the cycle information, right? We're looking at this kind of stuff. Look back on your own, see how it played out in the past, look at the two, combine the action together, see how it affected other markets like the SPY, lay out this information on the SPY or the SPX or whatever instrument version that you use or trade. If it's a CFD, you know, look at the CFD, but remember that these indexes and the ETFs and the things that look at the broader scope also help you sort of position yourself in the market and know why you might be in one place or another. Okay, and using these special techniques is important. It's important because these are the things that robots that are trading what people might call you know, algorithms out there, algos, you see that kind of stuff. These are the kinds of things that are sort of built into these robots that are trading. They're watching for these divisions and things to be hit so that they can sort of change their system. They're reacting to the same kinds of things. So if you're not paying attention to these things, then you're going to be missing a lot of what's going on with the rest of traders out there. I think that's what's most important. It's not some big secret. It's about being informed like other people are. And other people aren't just informed about, you know, price time cycles and all kinds of geometry. They're also informed about, you know, the financials of the market and the what you might call what would you call fundamentals or the macro look at what's going on across the whole world and how it's affecting individual markets, right? Like you could be examining treasuries, you could be examining, um, you know, um, all different kinds of uh, FX, all kinds of different currencies, and seeing their strengths and weaknesses against each other and where you might be positioning your money, right? Using alternate cycles, which cycle is stronger, which cycle is playing out, which one's weak, which one's strong. It's almost a very simple litmus test, a simple litmus test that lets you just lay it out, see if it's working. Is it bullish? Is it bearish? No, move on. Yes, getting your trade, move on. And it keeps you quick, nimble, um, and having a system like this one where you have two tools, lay them out, set your trades up, perfect, because then you'll have other things that you need to be into, like indicators. You need a good technical system on top of all of this to help you confirm these things. So if this cycle's moving upwards, that's great. But if we also start to break above these previous AVWAPs from highs, I think that's great to look at the high. And I think that, there we go. Okay. So this is a technical that I'm watching when I'm watching cyclical information. Is it going to break upwards? Well, if it does, I'm watching for this level of 19.1 to be broken at the time, sloping around that level. And if it breaks above that level, it means that the people that sort of shorted from here are now thinking of moving back to being long. They're taking profits. They're making sure or protecting any profits that they have left if they remained in and didn't take profits at the lows. So you have these people here psychologically being connected to the breakout here, and then the level from above here being connected to this level right here. And if this level is broken, well, you have a geometry which could sort of become symmetrical, right? What if we start to test these upper levels of the cycle? Well, where was this price here? So If we break above this level, we could start to aim towards the higher level AVWAPs. There might be some in between that we need to watch for. And ones from just beyond that we're going to want to watch for. And we can set up all kinds of great trades between the AVWAPs. But with the cycle information, it gives us the timing and the confidence to know, okay, we've also got the upward cycle here. We've also got the price action playing out. We've also got the break of the price of the low here, this 19.8 level, sort of associating to the AVWAPs that are being broken. Getting above here would bring us to these levels here. Getting above here would possibly bring us to these levels up here. And that's that 36 level. Well, there's also a 30K level in here that seems to be, on everybody's radar, and it's on my radar as well. If we're not going to get that, well, maybe we get another low down here instead along the edge, and retests of these AVWAPs also possible. Doesn't really tell us anything more, but we have the confirmation of one or the other. We start to think that one or the other might start to play out. Why? Because we could look back in the past and see how these indicators have played out and what they're really expressing to us when prices above these levels and these start to turn upwards. It means that things are moving in an upward level, an upward um, direction, and everything is kind of flowing together upwards. And when they start to differ from each other, when you start to see these numbers, these levels start to turn downwards and price not quite breaking above them, well, it's telling you the exact opposite, that price is sort of being affected by these things and moving downward. And if it was also associated to a downward cycle, that would help you make that same decision as to, short or be out of trades once you get into that downward cycle. But if it does start to fail anyways, you have the cycle information that would be opposite. So if the technical fails, well, that might be telling you that the real cycle is the downward cycle. The technical tells you that it didn't make it. There's no reason to be long here if we don't technically break out. And then what could be going on is a breakdown into this downward channel, just like it did previously here. And what does that mean? Well, it just means that it hasn't technically broken out, and we could still be retesting lows. We could still be moving to retest these levels here, could still be testing new lows here. Doesn't mean anything more than the possibilities of them. But the technical breakout above would sort of invalidate all that stuff. And we can try to look for that 30K or 36K level to be coming, or if again, a little breakdown here and then a bounce at the lows of the channel here, but still never really finding any new low and remaining quite bullish overall. Simple, directional, planning based, not just predictive, though if you look back, you'll see that it's quite predictive anyways. Okay. A good way to use the geometry of the circle, a good way to use previous price action, and a good way to use the birth date cycles. Some astrology, some astronomy in there, just for those who like that kind of thing. Okay, I hope this helps, guys.